Welcome back to Trade 360. I'm Dan King Hall. Time now for the big three stocks, three charts, three trades. Rick Ducat will take us through the charts. And here to take us through the trades is Jessica Inskip, Director of Investor Research, stockbrokers.com. It is great to be with both of you. All right, Jessica, since we have you here in person, I ask you this if you're not in person.
Sure.
I always like to get a big picture take on from you on the market action, especially when you think about, look, it just seems like we're flip-flopping. Right now, we're starting to recover. The S&P 500 off by just about 0.2%, despite worries about the rising tensions between Israel and Iran, despite these weaker than expected retail sales numbers.
Yeah.
So is it just, is it game on when it comes to bullish sentiment? Game on might be a stretch, but is bullish sentiment overriding worries?
I think it is. We have a different market structure, as in we're trying to look at overvalued PE ratios, and we're comparing it to the past. Structurally, the market, as measured by the S&P 500, is much more technology, which means from a valuation perspective, that makes sense. There is less earnings disparity, healthy profit margins, and actually more free cash flow per share, which I think is very interesting. But what I want to point out, and actually we talked about this at the Market Drive Schwab event that I was at last week on Friday, is these lines that we can draw on the overall market to understand clarity or if there's any type of conviction. Meaning on February 3rd of earlier this year, this is the first tariff that was implemented with Canada and Mexico. If we draw that line, it's around 59.80. Staying above that, to me, says we're not too worried about tariffs. Liberation Day was after that, so that just gives me an indication from market sentiment. What's very, very interesting, if we were to draw a line all the way back until 2021, the first trading day of 2021, when we had a restrictive Fed policy, that is where the S&P 500 bottomed.
Interesting.
Which tells me, it is interesting, literally, pun so intended, I love you did that, because it's interest rate risk. So interest rate
there
risk.
We go.
So the big concern is that tariffs are going to increase interest rate risk. But the market did not think it would erase the work that the Fed did because we didn't go below that level.
Okay.
So this is telling me market sentiment. It's a great way to marry technical analysis and an economic view and fundamental view.
Okay.
So I'm watching those levels. We're above that tariff level. Now we're creating an area of new uncertainty, which has to do with what's happening with Iran and the geopolitical tensions. But more importantly, now all of this data, we want to interpret it with Fed Powell and what he's going to say. And there's a May statement. In the May statement, he said, uncertainty about the economic outlook has increased further. I want that language to shift.
Yeah, so we will see. We'll get new commentary out this week. All right, so let's talk about the picks on your list today. You've got Vertiv on your list. In terms of its performance, it's running neck and neck year to date with the S&P 500. What's your view on this one?
Yeah, AI related as per usual, but it's what's driving the market. It's driving the narrative, and it could be a catalyst, and that's where fiscal policy looks like it's going as well. When we took the changes with the big beautiful bill or triple B bill that's going through right now with the solar. So we've got to be cognizant of that. They've got a really big project. If we think about what happened over in the Middle East, there is the UAE has a new 5 gigawatts AI campus. There's a stronger pipeline. This is all about AI infrastructure, though. There is data needs. There is cooling that this company does. They have market leadership with about 24% of that thermal infrastructure. That's very important as we build out these data centers. And as we talked about last week, as these hyperscalers are getting more clever with the way that they plug into the data centers, Vertiv is still going to be an infrastructure backbone for that AI build out. So it's very important for that component, and that's why it's my pick. I want to follow with that AI narrative, but also not just those AI specific securities. It's anything around that, in this case, energy, which is a very big headwind. They, of course, make money off of that because it's a tailwind for them. So.
I love that you use the term clever when it comes to AI because, I just always think about the robots and the bots who will come for many jobs. All right, Rick, so let's talk about this chart when it comes to Vertiv. What do you notice? Is there anything clever that you notice in this chart, Rick?
Clever? Well, today's move is pretty interesting, I would say. I don't know about clever necessarily, but I think my outlook would have been a little bit different if we talked about this stock yesterday. The reason I say that is because you can see this red line here represents the high point we had after our earnings gap down near 116. We had trouble breaking above it recently here. Today, though, we're pushing above it and holding on so far, so the old resistance is now supportive, that 116 level. The other reason that I think my outlook would have been perhaps a bit more bearish, I guess, not outlook necessarily, my technical read, let's say, is that we were seeing some bearish divergence as well on the RSI. Price was making increasingly higher closes. You can see our vertical lines here matching up with those high closing prices here. But RSI was trending downward despite also slipping back into that overbought area multiple times here. So overall, view is that the momentum, while still bullish, was slowing down a little bit here. But now with this break to the upside above that resistance level, this could be a very different story here if the bulls can hang on and make some progress beyond that point. A good example of why typically you don't want to just use one indicator blindly and just follow that. Nothing's perfect. There's fake signals. There's situations can change based on news or price activity here. So just some food for thought, basically. So now, if we were to think about our volume profile and standard deviation channel studies, we can see that another more piece of emphasis on this level that we were just describing is that this was a big volume node between about 106 to 113 before we got to our 116 area here. Also includes our 21-day EMA and our linear regression line, our line of best fit. So this general area looks like there's quite a bit of supportive factors to consider there. If we were to keep moving upward, our +1 standard deviation channel, 1 standard deviation up from our linear regression line comes in right around 126. So that could be an upside area to watch out for in the short term, but ultimately to this area near 145. An old high point, a low point after a gap up. That would be the area to the bulls would really ultimately have their sights set on.
Okay, all right. So that's a look at the chart for Vertiv. I know Rick made the point you don't want to just use one indicator. I saw you not in agreement with that. We are going to move on to your next pick,
sure.
Just for the sake of time. So Reddit, I know, is on your list. Look, if we look at a year-to-date compared to a one-year performance, it is very different. Year-to-date, certainly underperforming the S&P 500. On a year-over-year basis, certainly better. So what's your view on this?
Yeah, newer security since it's IPO'd, right? It's an AI play now. So there is very interesting component that's happening within social media. They call it algorithmic hangovers.
Oh, interesting.
Yeah,
I didn't know that term. I learned something.
Oh, right. Well, but it's utilizing the algorithm too much, and it's a consumption mechanism. And those are going to thrive based off of ad revenue. So now there's shift to other platforms that aren't public, that are more newsletter oriented, but it's community oriented. And that's what's making TikTok really thrive, is the community. There's a community on Reddit, and now Reddit has integrated AI analytics for more targeted ads, which is going to be a very interesting outcome. But ad revenue for them was up 61% for the previous quarter, and that was year over year based on Q1. That tells me that ad spend is there. That's only going to get better if we're targeting. And if we think about targeted ads in the old world, Google, for example, we know what you're searching. But if you think about Reddit now and how we can take that with AI analytics, it's based on your personality. You might want to be talked to in a different way.
Okay, that's fair, based on your personality. I do like the community feature in, the fact that it is community-based in Reddit, because I can kind of search. But I am also one of the people who doesn't log in when I go on Reddit. And I know there is some analyst concern around that, how you capture people like me who don't log in.
I worked at Merrill for a long time, and we captured cookies, and we know exactly who you are, so I'm not worried about that.
Okay. All right. With that, clearly, I'm leaving cookies everywhere, a trail of cookie crumbs behind me. So what does the trail of cookie crumbs look like when it comes to this chart for Reddit, Rick?
Well, it's crumbling, I guess, would be the wrong word. It's solidifying, I guess, because we had an interesting breakout above our resistance here, 125. So kind of like how our last chart was pushing up above that resistance area. Now Reddit has had a big jump to the upside here. So by one measure, you could say, well, we're kind of still within the boundaries of this channel type shape here. But when you look a little bit closer, you can see the move up happened on a volume spike with volume at least 50% above the 50-day simple moving average of volume. So a big gap up on heavy volume that shows conviction on the part of traders. Now you could also look and see that we had this very long-term downward sloping trend line on the RSI. You could draw. I wouldn't really put too much stock in that. But I can't help but notice that we did break above that pretty compellingly, and we are above the 50 midline now. So we have several bullish factors coming together now for this name here as we kind of try to digest what the next step might be. So if we were to move out of that channel type shape here, 159, our pink line here, high point, low point, repeated low points, consolidation area, that would be an area to watch. 159, 160 if we do start to push to the upside more. And then we can also see that the area right here that we just moved out of, it's all our moving averages, it's our volume profile point of control. Like you can see that there's a very heavy trading area there near about 113 or so. So we've held on to that key area and bounced and are pushing to the upside now at this point. Volume starts to come back into the picture here around like 165 or so. So that area I mentioned, 160, 165, that could be a notable area. If anyone out there is using Reddit, I need some help on Excel VBA. I made a post the other day. Help me with my spreadsheets, please.
I love it. We just did some live community curating there right now. Jessica, any final thoughts on Reddit before we move on to last ticker on your list?
Love it. I think that we're poised for a breakout and the technicals align.
Okay, and maybe the cookie will come together, or the cookies will come together.
Uh-huh.
All right, let's talk about the last one on your list, NDAQ, Nasdaq, outperforming the S&P 500. What's your thesis and what are your thesis and views here?
So this is more of a different than what we're talking about, but more of the changing market mechanics. So we have this rise of the retail trader. It started in COVID, but now they have really shifted and changed. And now we see brokerage firms really catering to where the revenue drivers are. And that revenue driver, a big portion is crypto. We've seen a lot of that with the smaller brokerage firms. And then another is actually options trading, which makes out quite a bit. But something has come out called 24-hour trading. And 24-hour trading, Schwab even recently launched it. It's not that people are night owls and want to trade all hours of the night. It's more for global access. If you have an international account and you want to access U.S. markets, you want to do it on your terms. And in order for that to be possible, there needs to be liquidity. So now there's bigger adoptions, and people who make money off of liquidity are exchanges. And Nasdaq is a component of that. Now, from a technical perspective, would love to hear Rick's as well. I do watch 13, 26, and 40 weekly moving averages. Represents 1, 2, and 3/4 worth of prices. Just like we look at the market quarterly, I like to look at stocks quarterly with a technical perspective. And I was also watching this line at 83. I wanted to break out above that.
Okay.
And we had a breakout above that.
You did get that, yes.
Yeah, exactly. So that retail participation, they're going to benefit from that. 24-hour trading, the next leg of that is options, because in order to properly hedge, I think market makers are going to want options in order to broaden that out. Therefore, money is made on exchanges when there's lots of volume, increased volume. Nasdaq's a pick for me there.
Yeah, it's true. Volume matters, obviously, in this space. So, Rick, talk to us about then what you're noticing. What's notable about this chart?
So the 83, 84, I had my eye on kind of the same level here. That's our green line here. The reason is because that was an old high point, another high point, again, that failed. We made some intraday highs beyond that level, but we didn't really hang on. We collapsed here. This was the low point of the tariff news shock that roiled markets. But from there, a very sharp rally here that's taken us above those old highs and into new highs near 87.50. Now we can see, though, that price has drifted a bit below this rising wedge type shape here, where we have two trend lines both pointing upward, both converging toward each other, just kind of showing the general boundaries of our price trajectory here. We have slipped beyond that point. Our RSI study has moved beyond its green trend line there to the downside. We are out of the overbought area. But like I was saying before with our first stock, not really a head for the hills sign. It's just like we're consolidating a little bit after a very lengthy rally. Nothing goes up forever. This could be an area to watch now, this 84 level, for a pullback as a buying opportunity, because it also coincides not only with those old highs, but with our 21-day exponential moving average. Now, not saying you should do that. I'm just saying that's what many people might be thinking about doing based on the supportive area that we have here. We can also see now our volume profile point of control, our heavy trading area, is around 81. So price is pretty convincingly above that point now. And just to give a quick visual here, these are the moving averages, 13 and 26. You can see the faster 13 week simple moving average is crossing above the blue 26 there. So we are seeing the trend improve. We're above those two areas here, forming a new volume node at this area above our old one as well.
Okay, all right, Jessica, any final thoughts you want to leave us with?
Yeah, it's great. I love it. Those 13 and 26 are key to me. It's a different way of looking at it technically. Again, it's 1 quarter worth of prices, 2 quarters worth of prices. We want to see prices increase quarter over quarter. Use it on the market, individual securities in your overall process.
All right, our thanks to Jessica Inskip of stockbrokers.com, plus our very own Rick Ducat, our lead market technician.